Hi, welcome to the video, and today I'm going to go over all of my positions on my TD Ameritrade. My TD Ameritrade is my main account where I hold a majority of my longer term positions. This year I've also been more into experimental and penny stocks. It's done very well this year, and this isn't to brag or show off or anything. I think I've gotten very lucky. This is just to share what positions I'm in and why, and hopefully you can learn something from what I invested in or what I didn't invest in. So my top two positions are Tesla and ET, and I'm not going to show the quantity just because that would be giving a little bit away too much information, but I'll show the market value of everything else. I've been in it for many years. Initially, I just invested because I liked how the cars looked. I didn't really do any deeper analysis than that. ET is a midstream energy company. I invested a lot into this because I was quitting my job and I wanted a way to get income. And ET is an MLP and it gives really high dividends. At the time I invested, it was about 18% dividends. Now it's been cut in half to 9%. So it's not the best or amazing investment anymore, but it's still decent. I'm trying to reduce my position. So now for the rest, I don't mind revealing how many shares I have, the market value and all that. So first is Palantir. This is a stock that I actually first got into at about $10, and then later I bought very expensive at $30. My cost per share is fairly high, but I actually was selling a lot of puts into this position. So I think my true cost per share is still in the teens. At some point I had about 1,000. I had to sell about 400 or so because I'm preparing to make another big purchase and I'm just gathering cash for that. Palantir, I'm very bullish on long term. I think it's a good company, solid fundamentals. Bingo, it's like a very popular meme stock. I'm sure if you've been on the interwebs, you know what Bingo is, and you also don't know what Bingo is. I can't say for sure that I know exactly what it is, but I know it does some type of gene sequencing, and there's just a lot of hype around it. I can't do super deep due diligence on all of these genomics companies. I just don't have the experience for it. If enough people that I trust are talking and I believe in this company, and I on a high level understand what this company does and I think it has a future, then I invest in it or I can give it a chance. And Bingo has paid off really well. I bought into it twice. First I got in when it was about $2.50, and then later I bought in at about $5. So my average is about $4, and so far it's up over 100%, doing really well. This third company is called ABML, American Battery Metals Corporation, and common stock. I saw some DD on this that seemed compelling. I wanted to get into some kind of metals and mining. I know that's a hot area, so I invested in this very early, got very lucky, and this has definitely paid off. I actually initially had 10,000 shares, but I already sold off 4,000 shares to get most of my initial investment back. Number 4, or number 6 technically, it's NEO. I got into this first at about actually like $12-13, but then I sold a call that really bit me in the ass because NEO just shot up, so I had to buy it much higher. This stock I've been chasing for a while, so I kept selling puts wanting to own the stock, but NEO just kept climbing up, so I was never able to own it. My actual purchase price, if you take into account all the puts I sold, is actually lower. But yeah, NEO, great company. It's an EV company, in case you don't know. Yeah, look it up if you don't know it. This is a very solid company, good to diversify any EV portfolio. AITX, it's a artificial intelligence technology solution incorporated, or that's what it's called, but essentially they make these robots that do security. And yeah, I read some DD. It made sense to me. I think there's a lot of potential in the space they're in, and I invested in it. This was a very risky play, and right now we're up just about 20%. We had a very aggressive swing down, and I was definitely in the red. All of these smaller penny stocks, as you can see, I'm not invested that much into them because I just don't feel that confident. But there's something there that for me, it's worth taking a risk. ZUO was a position that I actually was holding for a while. I had about 700 or 800 stocks and I really liked it, but I had to reduce my position when it just wasn't growing fast enough and there are other stocks that I wanted to invest in more. This is a company that helps other companies turn their business into a subscription-based model. That's essentially what they do. I really like that idea. I still do think they have a lot of potential, but I'm not sure when that will be realized, and I'm feeling honestly a little bit more impatient right now, which is not good, but I accept that. I want to see faster growth right now. This is PAC-B, and this is just a Kathy Woods pick. It's the number 1 stock in her ARC Genomics ETF. And that's basically enough for me. I've been trying to invest in it for a while. I kind of cost dollar averaged in just so I could have 100 shares. And I don't really have any more cash to invest anymore. Otherwise, I would. It's doing really well, 46% right now. This one is Space, or Virgin Galactic Holdings. This is Richard Branson's company. This is the company that he wants to help make leisurely space travel possible. So like you and me could both go into space if we're willing to pay the price. I just like owning this stock because I think it's a really cool idea. I think it has a lot of potential if it's successful. The one big downside is if their launch, which hasn't happened yet, goes poorly, then this stock is going to tank. So this is very, very high risk, but I don't mind putting my money there, even if it's high risk, because I really believe in the mission. U is Unity Software. It's like the gaming engine that's helps develop a bunch of games. And yeah, I got in right when it IPO'd, or I think it was a DPO. So this has done really well. I got in at $70 at $144. I wish I could have bought more, but not enough money. CRM, this is Salesforce, and I was really, really lucky. Out of college, I was a consultant, and one of my clients was Salesforce. And after learning about this company, working with on the platform, I saw the value it had, and I actually invested like 20 or 30 some shares. Actually, I think I invested 50 shares and I've sold off through the years. In hindsight, I shouldn't have sold off, but this is why my cost basis is so low. I've gotten over 400% return. Yeah, I got in when it was just $43 a share. Super lucky, in the right place at the right time. And yeah, bought it. This is a Workhorse. It's an EV company. At the time, a lot of hype. I was really bullish on the stock. Out now, after the dust has settled, not quite as much, but it's still a good place. I think it's fine to hold 100 shares, and my cost basis wasn't that high. It's only $17, so I'm still in the green. This I'm still watching. CrowdStrike, it's just a really good, hot cloud company. I'm not going to pretend to know too much more about that. I invested 10 shares based on, people talking about it. It's done really well, over 100% return. The next one is CRISPR. This is the gene editing company, also one of the top holdings of Arc Genomics. I invested at about $155 pretty late. I've been trying to build my position more, but I think it's a little bit expensive right now. It's done decent, 27%. I think this is still very shaky. It could definitely fall back down. And if I had a little bit more cash, I would buy more, but it's a little bit expensive right now. AQB, another ARC pick, but not just an ARC pick. I got this rec from Dead Inside at the time, and the moment he explained it, it's about like being able to farm salmon fish like faster and more better, and just a more efficient way of making more salmon fish or larger fish. And I thought that was really compelling. So I invested 400 shares. I've already sold about half off to get my cost basis back. But yeah, at about $4.50, and it's done well, over 100% return. This TMUS is also one of my very early investments. Also right out of college, I was looking at the T-Mobile commercials where they had that pink girl on the motorcycle. And actually, this is something I don't hear people talking about, but to me, aesthetics and just the looks of things matter a lot to me, because I didn't really understand or have any interest in fundamentals of a company at the time. All I cared about is if it made me feel something, I assumed that it would make somebody else feel something. So when I looked at T-Mobile's commercials at the time, I just thought they were really well done and they were very different. And all their commercials were doing something that felt more exciting than every other phone company. So I invested a decent amount into T-Mobile. This is also a stock that I've sold throughout the years to take profit. My cost base is $33. It's at $130 now, so over just about 300% profit. This is NNDM. They print stuff. This is a very popular, hyped stock. I just got in because everyone was talking about it. And yeah, it's done pretty well, 50 some percent. I don't know that much about it other than I didn't want a FOMO. I'm just going to be completely honest. Here is Apple. And Apple, I got in super late just to have a little bit of exposure to. This was very earlier on last year before I was getting more into finding the best stocks. Apple's a very safe stock, so I invested a little bit into it, but now I probably wouldn't hold as much Apple because I am much greedier now. I'm looking for Teslas, not Apples. This is RBKF, and it's a blockchain company that mines Bitcoins. And this isn't doing that well. I got into this too late, but I was also in Riot fairly early on, which has done really, really well without having enough money to really afford Bitcoin, these blockchain companies are really interesting to get some exposure because as long as Bitcoin's growing, these blockchain companies generally are also growing too. So this is one of the blockchain companies that I think that is doing pretty well. I'm going to continue holding. And that's actually the one thing that's in the red as of today, minus 5%. Here, Square, super good company, payment processor of the future. I got in at $120. Now it's at $227. This is a company that I probably should want more of, but I don't know why I don't. It's just not as exciting because everybody has it, but clearly it's done very well. Final one is IDEX. IDEX is a company that is in the commercial electric vehicle space, and it's also in next generation fintech and blockchain related stuff. That's all I really know about it. This was another company that I saw somebody else talking about, and at the time it made a lot of sense to me, and I invested like just a couple $100. My cost basis was under $2. I also invested in this company on my Robinhood. And yeah, it's done pretty well, my smallest position here. So I actually split up my account into two parts just for trading and organizational purposes. I initially just wanted to put more riskier trades in one and more long-term ones in the other, but they've just become kind of intermixed. Actually, in this account, I also put 100 shares of Tesla here just because I didn't want to be trading this because I'm trading my main account now so aggressively. I wanted to just have stuff set aside that I'm not actively trading, and this is just to control my own impulses. If every single cent of my money was in one account, I might be putting it all on the line, and this is just a way for me to not be tempted if it's in a totally separate account. So here I have 100 shares of Tesla. Obviously that's doing very, very well. You can see my average cost per share was very low. Never in my wildest dreams did I imagine this is how much it would grow. Second to this is Nanix. This was also a dead inside pick, and I was actually pretty skeptical about this, but there are actually a lot of stocks this year that even if I have skepticism about, I can see or I can kind of feel that other people might not have the same skepticism. And I'm definitely riding what I think the market or people in general are going to be excited about. And this was a stock that I continued to hold because even though I read through the Muddy Waters and Citron reports that had some pretty damning information saying that it wasn't really legit or it wasn't as revolutionary as people thought it was, I still thought that people would be excited. So I held, and I've sold off 50 shares. I had 100, but now I just have 50 left. It's still done well. It's still grown. I think this company definitely has a future, but I'm probably going to sell off fairly soon. Next one is Hyliion, another EV company. This is all hype and FOMO, and this is also in the red, not doing the best. Next is Nokia, 5G exposure. That's basically it. I got in at $5. It's not doing that well, down 18%, but I'm just going to hold this. This is so cheap. It's only $826. Finally, CRBP. This is a pharmaceutical stock that I sold a put on a long time ago because the premiums are so juicy. Their clinical trials didn't go well, and the value of their stock tanked. And this is why I don't mess with pharmaceuticals anymore. I'm glad I learned this early because at the time, this was a huge loss for me. I lost, it felt like more than this, but yes, this is definitely my greatest loss. And in my Roth, I actually just have ARK-K and more Tesla. Okay, that's it. That's officially everything in my TD Ameritrades. That's the bulk of my whole net worth and my investing portfolio right now. What do you guys think about my positions? What do you think I should add more of or subtract some? Let me know in the comment section below. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.